Guys, welcome back to Accounting with Nick. Hope you guys are doing good. What we're going to do right now is revise session 1 to 4. So, as I told you guys earlier in the group chat, that a lot of things that we have done are not going to be tested now. That does not mean it's not going to be useful, but it's still not going to be tested in your finals. Um, but right now, you guys are waiting for your midterm grade, and first of all, super proud of you guys. I just heard from Dick, or Dick was telling this in one of the classes, that for the first time in 5 years, the Cergy campus's average is more than Singapore. So amazing, guys. That's very good. And I'll quickly explain how grading works at a sec. So let's take this chart. So let's say this is the curve. Okay, this is the curve for the grades, and let's say you scored somewhere around here. Okay, let's say you scored a 9. Okay, and let's say the average grade is a 7. So the average, so what ESSEC does is that they take the average for the last 5 or 10 years. So I think, for example, let's say that the average for accounting, it has to be 12, right? So if you do like mediocre on a very tough paper where everyone did bad, what happens is that they increase the average. So they have to bring the average close to a 12. Okay, so if they bring the average close to a 12, so they want the average to be 12, so your grade would also jump up, and if you scored a 9, it would end up being a 15. So that is how grading works at a sec. So I would be not very worried about your midterm. And also, guys, midterm is only 40 or 30% of your grade, so very minimal compared to the final, which I think is the most important part of your like all your finals for all your subjects is what you guys should be very focused on, because that is where the main weightage comes in. So hopefully the grading scale is clear. I'm going to talk a bit about this on Friday too. For now, let's move on to learning about the finals pattern and how the papers are. Okay, so we're gonna quickly talk about the format. So for the finals, you're gonna see 5 short questions and 1 case study. And it's not gonna be like the midterm. In the midterm, you have a lot of unpredictability. In the final, it's very structured. So what I'm gonna teach you here, you're gonna see just questions around that, but different numbers. And of course, the case study is going to be it varies a bit, but hopefully we're going to do a lot of case studies, and you're going to see a lot of common questions and common transactions, and you would know what to do. So about the short questions, you're going to have around 5 short questions, or exactly 5 short questions, with 4 to 5 sub questions. Okay, and you're going to have 1 or 2 questions on interest and insurance. Some people, I solved some questions for interest already. We're going to redo that soon. Then we're going to have 1 question on income statement. But this over here is going to be more aimed towards calculating the net profit, the tax, the EBIT, earnings, which is earnings before interest, tax, depreciation, and amortization. I'm going to teach you guys to calculate all this. You guys already know how to calculate tax, net profit. EBIT is, we're going to get to that soon. No worries. It's not that hard at all. When we calculate net profit, we already have calculated the EBIT. So if we just add depreciation to it, it becomes EBITDA. So yeah, super cool. We're going to talk more about that soon. And you're going to have 1 or 2 questions on depreciation and impairment. Usually how it works is you're going to have 1 question on depreciation, and you're going to have 1 question with both depreciation and impairment. Again, right now, if you're watching this right now, you probably not know 3 of the topics over here, but it's completely fine. We're going to go through everything together. This is more so to give you guys an outlook on what to focus on and what to not focus on. Like for example, LIFO, FIFO, all of them are not coming, and you guys no longer need to solve questions for that. And there's a few more stuff which is not going to be asked. Like you're not going to be asked the journal entry. You're not going to be asked to make a T-shaped account. And you're not going to be asked some like a lot of questions that you were asked in your midterms. So we're gonna focus a lot on exactly what's being asked. And now let's talk about the case study very quickly. The case study, you're gonna get a balance sheet. You're gonna get a balance sheet from last year. Okay, so for example, we're in 2025 right now. So if ever you're gonna get a balance sheet from 2024, and you're gonna get some transactions. So you're gonna get the balance sheet, and you're gonna get a lot of stuff that happened in 2025 after the financial accounts were made, right? So when do we make the financial accounts? We make them at the end of the year, correct? So this would be December 2024. So you're gonna have a balance sheet of a company for December 2024, followed by transactions that happened till 2025, like till December 2025. And your goal is to make the income statement, the balance sheet, and the cash flow from the previous balance sheet and transactions. Okay, so we're gonna start off by talking about the income statement, okay? So the income statement is a T-shaped account which has two sides, debit and credit, like all T-shaped accounts, and the debit side is revenues and the credit side is expenses. We know this by now, right? And why do we make the income statement account? We make it to find the net profit or the net loss, right? I'm going to quickly go over what comes under all of these, right? So for revenue, the main source of revenue is sales for a business, right? The main source of expenses are operating expense, right? Like bills, salary, etc. And some additional revenues could be interest revenue. And interest revenues are revenues that we get when we give out a loan to maybe another person or another business and they pay us interest. That's a revenue that comes here. The third revenue could be dividend revenue. So dividend revenue is when we invest in another business, right? And if we do that, they're gonna pay their shareholders some money, and we invested in them, so we're their shareholders. So like that is what dividend revenue is. Now we'll talk about expenses. Other than operating, you have depreciation, okay? And depreciation is a massive topic, and the next session is going to be all about depreciation. So you have depreciation, and you have also interest expense and dividend expense. I hope you guys remember, interest can be both a revenue and an expense, same with dividend, because if you give out a loan, you would receive interest. If you take a loan, you would have to pay an expense, right? So it would be an expense. And same way for dividend. So if we invest in another company and they give their shareholders money, we will receive money, right? But us as business owner, as a business, like when we give a share of the profit to our shareholders, is going to be an expense. And the whole goal is to add up all the revenues, add up all the expenses, and then subtract them. Okay, and if the revenue is more than the expense, we're gonna have a net income. Right? And if vice versa, so if we have if expenses are more than revenue, we would have a net loss. Hopefully, income statement is pretty simple. It should be very clear. Okay, guys. Now we're gonna go to the balance sheet. So I drew the balance sheet right now, and we're gonna go through it one by one. So again, balance sheet is also just like a T-shaped account. The asset side is the debit side. The liability and equity side, which is also called the financing side, is the credit side. Okay, and let's go through each of the topic. So for the assets, you have PPE. That's the so first there's non-current and current. Non-current are assets which are business plans to use for more than a year, and current is assets that business plans to use for less than a year or transfer it back into cash in less than a year. So to start off, non-current, we have PPE, which is plant, property, and equipment. Pretty self-explanatory. We have long-term investments. So you in the income statement, when we were getting that interest, right? So when you give out a loan, you expect interest every year, and then after a period of time, you expect them to pay you back the principal amount, right? So till they've paid us back the principal amount, it is a non-current investment. But if they're supposed to pay us back the investment under a year, then it will be a current asset. Okay. Now let's look at intangible asset. So intangible assets are assets that we cannot touch. Okay, kind of like patents, trademarks. Yeah, and then you have the current assets. So the first current asset is cash, which is the most important one too. Cash is the blood of a business. You have inventories. We talked a lot about inventories before. You have receivables. So receivables is when you as a seller, like let's say we own a business. Let's go with Nick's ice cream store again, and let's say that Chan comes in and buys an ice cream, and instead of paying me right now, he says that he's going to pay me back later. So till the time he pays me back later, he would be a receivable and he would be shown in the current asset. Then you have prepaid expense. So any expense that you paid for in advance, that's a prepaid expense, right? And then we have VAT deductible. So you're not going to see questions with VAT, but you might show up in the balance sheet. So if it does show up, it's just going to be like there. You don't have to calculate VAT anymore, which is also cool. Now let's look at liabilities. So liabilities, again, you have non-current and current. You can write it either way, to be honest, it's fine. But yeah, like for non-current and current, just make you're not gonna we won't have to write anything. So how your finance is gonna look is basically you're gonna be given the title. So for example, you're gonna be given PPE, and there's gonna be a blank here, and you have to find what the value of PPE is, and you put it there. Same for everything. So learning each and every item is not necessary, like remembering, but remembering like what they are and where they come is very important. But yeah, so let's move on. So you have short-term and long-term loan. If it's a short-term loan, that means under a year. It's a current loan. If it's a long-term loan, that means more than a year, and it's a non-current loan. And then you have provision. So provision is like an emergency fund where you store some money ahead of time. The management does it thinking of the worst case scenario. Basically, it has to do a lot with strategic planning. An example that I could take would be something like you gave someone some money. So let's say you have some receivables, like let's say I gave some money to Honore, right? Not some money, sorry, some goods to Honore. He came to my ice cream store too, and I gave him some ice cream. But Honore apparently has a history of not paying people back. It's not true, by the way. I'm just making an example. So if he does, I have to assume, like I have to take into consideration that maybe I won't be getting paid back too, and maybe I give out a lot of receivables, right? So there's going to be a percentage of the receivables that usually default or they don't pay me back for my ice cream. So you make provisions for all of that stuff. Like you make provisions even for pensions for your employees. So yeah, like you make provisions for that. It's usually always long term. Then you have VAT payable. So this is the money that you owe to the government. This is the money that the government owes to you. But again, you don't have to calculate VAT for your final. That's something that you won't have to do. It's also removed for your final syllabus. Then you have payables. So payables is the opposite, right, of receivables. So over here, it's usually when a business orders some supply from their manufacturers, and instead of paying them instantly, they pay them back in a bit. And because they already have a relationship, so where they buy and sell a lot, it's so the suppliers sometimes don't mind being paid half a week, or sometimes they give out more goods, so they can charge a bit more even if they're getting paid later. So till we pay the manufacturer, they're payable to us. Cool. Now we talk about equity. So equity has everything to do with the shareholder, okay? And the first thing that we talk about is share capital, or just capital, which is the initial money plus any money deposited by the shareholders to run the business successfully, okay? And you have one more topic underneath share capital. We didn't do this now. We didn't do this earlier. We're going to do it now. It's called share premium, okay? So this is only for shares. So what's the difference between me owning a share and me starting a business? So the main difference is that if I start like Nick's ice cream store, no third party can just buy some part of my business unless I want to, right? But with shares, they're listed publicly. So that means that anyone and everyone, if they want, they can buy and be a shareholder in the business. So that's the main difference between a private company and a public company. And once, let's say that Amazon issues share for 100. Okay, this is the amount that it issued one share for per share. So to own one share of Amazon, you'd have to pay 100 euros. Okay, but once these shares are given or allotted to people, what happens is that you have a whole you have a whole market which is called equity market, ECM to be equity capital market. That's what it's called in finance. It's them, other people. So after me getting this share, I sell it. Let's say I sell this share to Eugenie for 110, and then she sells it to Haruna for 108. So you see the cycle, like it keeps on going, and this creates a market, right? And every so price paid above the initial 100 is basically called share premium. So premium basically means you're paying a little bit more, okay? But again, this is a very deep explanation that I just gave. If you didn't get any of it, I can repeat in class, but it is basically, if you did not, it is just something you're gonna see. You won't be asked to like find the share premium or anything like that. It's gonna be, if it's there on the last in the last balance sheet, you copy it basically. And yeah, then you have net income. So net income is what we calculated from the income statement, right? So if it's net, if it's profit, it's gonna be net income. If it's a loss, it's gonna be a net loss. And then we have reserves, which are previous year's net income. So money reinvested in the business is called reserves. Okay, hopefully the balance sheet is clear. So this is going to be very, very important for your finals because the case study that you're going to have is going to have a company's balance sheet, right? And you're going to have a lot of transactions and you make a new balance sheet. But I was just saying, as I was saying earlier, what you're going to have is that you're going to have just a list of all the items in the balance sheet. So for example, you can have PPE, long-term investment, intangible assets, and you're gonna have a blank next to them. A blank, a blank, a blank. So you need to look at the last year's balance sheet, then see what transaction happened during the year, and you find out what transaction happened during the year which affects PPE. So we're going to talk more about that in the later sessions, but for now, hopefully balance sheet is like refreshed. Of course, we're going to talk a lot about balance sheet going forward. So yeah. Okay, now we're going to talk about cash flow. So we talked about cash flow earlier, but now is when we actually see it in our exams, in the finals. So so cash flow has to deal with cash, okay? Cash is king, and when you're solving a cash flow, you forget everything else, okay? You only care about the inflow and the outflow. Okay? Inflow and outflow of cash, right? And you have 3 headings. So this is not a T-shaped account. It has headings. And this is how you're going to see it in your finals too. So you're going to have operating activity. So all the headings basically justify all the money which is being spent doing business. Okay? So the first one is operating activity. So operating activity is basically everything we do in the income statement, right? So we talked about a lot about all this, right? So everything such as salary, bills, interest, revenue, sales, everything to do with income statement would come in the operating activity. And in the finals, you're going to have a heading, cash flow, you're going to have operating activities, and then you're going to have salary blank, bills blank, interest revenue blank, sales blank. You're going to have a plus and a minus, so a positive and a negative, positive and a negative. And what you have to do is that you have to find the amount that was paid for, let's say, salary. So in the transaction, once you're reading the question, you're going to have like around 18 transactions. One of the transactions is going to be around salary, okay, which you're going to use in the income statement, and then you're also going to use it for the cash flow, right? And what do we do with salary? Do we pay it? We pay it, right, in the operating activity. So if we pay salary, is it going to be an inflow or an outflow of cash flow? It's going to be an outflow of cash flow. So this is how you're supposed to think, right? I'm just thinking out loud. So you have sales. So when we sell something, what happens? We receive money. So is that an inflow or an outflow? It's an inflow. That is how you're supposed to think. And you find the sales. You just write the sales here. You find the salary you paid. You write the amount here. And cash flow is something that I want everyone to score 100% on. It's very hard to not score well for cash flow because it's very easy and you guys can do amazing with this. Now we're going to talk about investing activities. So investing activities deals with everything to do with the assets, buying and selling of assets, okay? Investing activity. So let's say we bought land, okay? You're going to have the same thing, plus, minus. So if we buy a land, it's going to be negative, right? Even though assets increase, we only care about the inflow and outflow of cash flow. Outflow of cash, sorry. So yeah, so more examples could be purchase, let's say equipment sold. So if we sell equipment, we're going to receive money, correct? If we receive money, it's going to be a positive. And you'll have to again find out what exactly the amount is. And once we do questions for it, once we start solving the last year's papers, you're going to see how the questions are like aimed, and like it's not that hard, to be honest. Like I want all of you guys to score very high in this, and you definitely can. Then you have financing activities. So financing activities have to deal with how we're getting money to fund all of our expenses and all of our investing activities. So financing activities has to deal with loans or shares. So if the shareholders decide to put in money in the business, that's going to come here. So let's write that. Let's say capital invested. So if shareholders are putting money in the business, it's going to be a positive. So it's going to be an inflow for the business, correct? And let's say we repaid a loan. We repaid a loan. Okay. So if we repay a loan, so what's happening? Are we losing money? Are we gaining money? It's going to be an outflow, correct? Because we're repaying a loan. And if we take a loan, it's going to be an inflow. So you're going to have just this, like you're going to have some transactions, like it's going to like the whole the skeleton is going to be made for you. The template is going to be laid down for you. You only need to find plus, minus, and the amount. And this is the same for the income statement and balance sheet. Okay guys, after looking through all the sessions, that's all you need to know from session 1 to 4. I highly recommend you guys to start your journey with coming to my sessions for session 6 to 10. Okay, and then we're gonna solve all previous finals. Okay, and the plan is that we're gonna try to solve them, I think 2 weeks before. Like I'm gonna have all the solutions for the previous exams on the drive, and that's gonna be me in a video solving and explaining every question. And at the end, I'm gonna try to make 2 to 4 papers, like my mock papers, that you guys can practice. And hopefully you guys do amazing.